Prime Lending. When you guys have a question, there you are. Somebody already knows. When you guys have a question, I want you to find that GoToWebinar control panel, and Cindy and Paige in Montana, have found it. They've piped in here. Cindy, I'm sorry about that. Maybe this is a little bit better. So when you guys have a question, I want you to find that GoToWebinar control panel. I'm going to have you check in right now. Okay? So I'd like you to tell me, on a scale of 1 to 10, think about the last transaction that you completed where you were representing the buyer. On a scale of 1 to 10, I would like you to tell me how awesome was the communication with your lender. And hopefully we got a bunch of you guys that are on the high side of that, but how great was that communication, both with you and with the client? When you walked away at the end of the day, all right, so there's some of you guys must have some really awesome lenders, and that's fantastic. So some of you guys are being really honest with me here. I even got some people, I love that, like on a scale of 1 to 10, some people just have to like add something. That's me. I'm the guy that I could never just write 4. I'd have to write 4 and then tell you why. And a bunch of you guys are doing that for me, which is almost lost the deal. Yeah, so David and Deric will talk for just a few minutes about some of the cool communication stuff that they have. As I bring these guys on and introduce them, I want to just, my girlfriend and I right now are looking for a house, and you know, we're doing it the same way that everybody does it, which is we're not that close to buying something yet, but we spend a lot of time online looking, and mainly we're looking at homes, right? And we've gone through the process of kind of self-qualifying, right? We know our credit scores, we know how much we have for a down payment, and we've done the different, you know, online things to figure out how much of a mortgage we can handle. But in looking at houses, one of the things that we've never really done is looked at houses beyond maybe what they are on the surface. And man, after kind of getting to know Deric and David a little bit and learning about some of the stuff you guys are going to learn about today, like, it has opened up a whole new world for Aaron and I in terms of what houses we could be looking at. And so you guys are going to learn a few things today that are really going to help you with your clients. So I'm excited that, and it's going to open up some possibilities for them. And it's already done it for me. So I know that your guys' clients, with the knowledge that you're going to pull out of here today, are really going to just have more options. And for the last couple of years in lending, more options has not been kind of the status quo. So I'm excited to have these guys here today. So enough from me, because again, I can't just give you a 4, right? I got to give you a 4 and then explain it. Let's bring on David and Deric with Prime Lending. Gentlemen, how are you today?
Oh, we're doing great, Bob.
Good,
great
good.
to be here. We appreciate you giving us the opportunity, and we're going to go ahead and kind of jump in and I guess get started. If you're ready, we're ready.
Yep, we're ready. So here's what I'm going to do. I'm going to get out of the way. If you guys, though, that are on the line have a question, and you just fire it into that GoToWebinar control panel, I'll keep track of those. If it's really important, I might jump in on these guys. If not, we'll have some time at the end. They've got about 30, 35 minutes of content they're going to bring us. We'll have plenty of time for questions, and we'll get you guys all out of here and back to your days in short order. So take it away, gentlemen.
Great, thank you. So real quickly, for those of you that are not familiar with Prime Lending, just a little background about Prime Lending. So for the last 2 years, Prime Lending has been the 4th in the nation for purchase transaction, and that is a direct result of everyone on this call. So first and foremost, thank you guys so much for the outstanding jobs you guys do as real estate agents in helping us reach that number 4 position. You know, buying a home is one of the biggest decisions someone can make, and when you really think about it, you know, what are we really selling here? Are we selling homes? Are we selling loans, programs, products, interest rates? And to me, I think what we are really selling is one of the hardest things to sell to anyone, and that's trust and confidence. So at the end of the day, you know, a home buyer wants to have that trust and confidence with a professional. So, you know, what does it mean to be a professional? To me, to be a professional, it's all about being passionate and knowledgeable in your position. being passionate about what you do every day, waking up in the morning and excited that you get to do what you do, having knowledge about your local market, knowing about the surrounding schools, the neighborhood, finding the perfect home for your buyer. I mean, really, to me, there's no better feeling than seeing the joy and happiness of that family finding their first home or that second home. So that's really what we're passionate about, helping people purchase a home. It's what Prime Lending's been passionate about ever since I've been with the company. And today we want to share a lot of that passion with you with some interesting facts, fun things, and different products and programs that we offer. So my name is Deric Barnett. I currently serve as the Vice President and Director of Product Development for Prime Lending. I've been with Prime Lending for 11 years. In those 11 years, I've developed many procedures, products, programs. I also currently serve on the TMBA, where I serve as a Future Leader Committee and also Government Relations Committee. Love working for Prime Lending. We're constantly looking for new opportunity, new products, new programs to, help our client base, which is, not just home buyers, but our real estate agents, so everyone on this call. Okay, so I know it's really only August and 2014. The year's going fast. What I'm going to actually talk about is 2015. Talk a little bit about new home buyers that are going to be entering the market in 2015. More specifically, this next generation of home buyer that we're expecting to come into the market. So when I say next generation home buyer, I'm generally talking about Generation Y and millennials. So anyone between the age of 19 and 34. So how many of these millennials do you think are out there today between the age of 19 and 34? Actually, the Census Bureau estimates there are about 90 million people between the age of 19 and 34 in the United States. Now, what do you think the average credit score of this generation is, 19 to 34? Average credit score, 628. How about the average amount of debt that the people have between the age of 19 and 34? Average amount of debt is about $23,332. So how does this generation stack up against some of the older generations? So this next chart, we have millennials in the red, and they have the lowest credit score. They do have the lowest number of credit cards, the lowest balance on those credit cards, but they're tied for the highest utilization of credit. So what does this number tell us? What do all these things tell us? Well, a few things. First is credit score. Sadly, there's a severe lack of education surrounding credit and the understanding of credit scores in this country. We definitely need to educate our buyers and our consumers about credit, the importance of maintaining good credit, and how to establish higher credit scores. So when you're working with a millennial, it's really important to have them contact a loan professional, because those loan professionals can start helping them with their credit and understanding their credit and how to improve their credit. Too many times young buyers will put the horse before the cart. They'll start looking at homes before knowing what their credit score is, and you can only imagine how many times you guys have run across this where you have a contract pending on a home and then it falls through because of credit. Happens more than not. Second is the use of credit. So granted, this generation has the lowest amount of credit cards and balances on those cards, but they also have the highest utilization of those cards. Now, this could be because of their credit score being lowest, but this also shows the ability to obtain credit has become tighter in recent years. Now, many banks are looking at risk over anything else, so they're not giving out credit cards as freely as they were in years prior to 2008. Give you a quick personal story. I got my first credit card when I was 20 years old. It was a Capital One card, had a $500 balance, thought I was king of the world. I was a little young, a little naive. So as soon as I got that card, what do you think I did with it? I went straight to the gas station. I had to make sure it worked, of course, so I used it at the gas station. Then after that, went to the movies, got some dinner, bought some new shoes. Before I knew it, I maxed it out, and I couldn't afford to pay it. So after 2 years of late fees, I had a balance due of a little over $1,000. And when did I actually start caring about my credit score? When I wanted to buy that first house. So it's really important that as we work with this younger generation that we help them understand how their credit affects their ability to obtain a home, to purchase a home, how it's going to affect their interest rate. And loan professionals, whether it's Prime Lending or whoever you may work with, we can all help those buyers understand the importance of their credit. So it's estimated that nearly a third of all millennials are renting, probably another third are living at home with their parents. So the question is, why are they renting? Why have they not made the move to homeownership? Now, there are multiple contributing factors to this. A few of the more common situations, of course, are employment. It's difficult to find a job as people are working longer or they're just not really available. Credit, ability to qualify for a home purchase due to lack of income or their credit history. Some other reasons, though, that you may not think about is perception, the perception of home ownership. It's dramatically changed over the years. It's not a serious priority for this generation as it has been in years past. Now, 8 or 9 years ago, this generation had a front row seat to one of the worst economic and mortgage collapses in history. They saw what may have happened to their parents, their friends, other family members. The mortgage collapse has put a fear and distrust in this generation regarding home ownership. So finally, something else that you may not think about that makes this generation a little unique is something that I can guarantee that everyone on this call has and uses every day. And if you can guess what it is, you're probably looking at it right now. It's your smartphone, right? This generation lives, breathes, and eats technology. Facebook, LinkedIn, Twitter, Instagram, and other social media has really kind of made homeownership not cool, right? I mean, how many times have you been on Facebook and someone just posts, just locked my 30-year fixed rate loan at 4%, closing next Friday, 3 people like this? It's not something you really see every day on Facebook. Other challenges that this generation is facing is median income and house pricing gap. So if we take a look at this next slide, we got a really good graph here of what that's going to look like. So as we can see in this chart, home values are starting to rebound from the market crash of 2008, while the median income for these individuals between the age of 25 and 34 is increasing, but really not enough to keep up with the home value appreciation. So it's making this kind of affordability gap for this generation to afford these homes because the prices are increasing while their income is staying steady. However, there is some expectation that this generation income will have the opportunity to grow and continue to grow, which will help with their home affordability and also ability to purchase a home. So how does this relate to you as a real estate professional going forward into 2015? Now, depending on the growth of employment in this country and home values, if they continue to grow or depreciate, you really want to prepare this generation of home buyers to have a realistic expectation of what they're going to be able to afford. You know, the $250,000 home is great, but you may want to consider a $175,000 home instead. So it's really about just setting proper expectations for this generation of what they're going to be able to afford, so that way they're not only responsible buyers, but also a successful homeowner. All right, so let's consider the impact of the income, employment, and home prices and how that's going to affect homeownership rates. Now, this first graph is the expectation of homeownership rates forecasted all the way through 2017. The light-colored solid line would be the trend going into the next 2 years if homeownership rates continue to decrease for people between the age of 18 and 34, while the darker dotted line is forecast of if homeownership rates increased for this generation. Now, you can see there's a pretty large gap between the two, and the impact to the decline would have a huge potential on these home buyers over the next 2 years. Dropping the homeownership rate all the way down to 35%, a little bit lower. If we did have an increase as forecasted, then we would push homeownership rates for this generation close to 40%. So the question is now, how does this affect home sales? How does this affect you as a real estate professional making home sales? So if we look at the decline, and the home ownership continues to decline, it's estimated that new home sales will fall about 100,000. I'll say that again. Close to 100,000 new home sales will fall if homeownership rate continues to decline. That's, I mean, it's a huge number when you think about it. Now think about the impact that has on you as a real estate agent in your local market. So on the flip side of that, though, if homeownership can grow over the next years, then we'll push home sales up to 600,000 in 2015, and then by 2017, we're going to be pushing close to 800,000. So how do we as real estate professionals help this generation reach those numbers? So besides the employment and income situation, we need to have better educated borrowers in the market, buyers that work with professionals that will help them understand the home buying process and give them the tools to succeed, to be successful homeowners, not just tomorrow, but in the next several years. Now, from a mortgage market and availability of credit, we need to get more liquidity. We need more liquidity in the market to lend money to this generation, but also to keep the market competitive for them. Now, to give you an idea of the liquidity that I'm talking about, this is a great timeline of how much liquidity we have lost in the market. So between 1994 and 1998, there were over 30 different banks and other lending institutions in the market. After 2008, All of those institutions were acquired by the big four banks, Citi, Chase, Bank of America, and Wells Fargo. Now, you also throw in the 100 of others that went out of business after the mortgage collapse. So we desperately need some more liquidity in the market, not only have a real healthy market, but a competitive market for the consumers that we all serve. All right, so let's quickly recap on some of the challenges that we're going to face going into 2015 and the following years. So, number one, definitely liquidity. Due to the lack of liquidity in this market, we have fewer investors, we have fewer opportunities to obtain credit for home purchase. Now, you also throw on top of that some of the struggles that we had from 2008, right? There's still a lot of lenders that feel the sting from 2008, which have kept their lending guidelines pretty tight and restrictive. Then in addition, it's perception, right? We talked about perception. You know, with new regulations over the last 2 years, we have seen more and more regulation be placed on the housing market, which has caused higher credit standards in the hope to, create a substantial and sustainable market. And then finally, just difficulty. It's so much more difficult now to originate a mortgage loan. Takes a big toll on lenders, additional paperwork, verification, staff, resources. Basically the cost of doing business is incredibly higher than in years past. One great example that I can give you from our own internal company is our compliance department. So compliance is just responsible for reviewing all of our loans, making sure that we're compliant. Prior to 2008, our compliance department was a staff of 5. Today, it's a staff of 60 individuals, and these are 60 individuals that are reviewing and checking to make sure that loans are compliant. So you can see that the regulation, the perception, the liquidity has all placed a lot of challenges for us going forward into 2015, and especially for this younger generation that's entering the market. So don't want to be all gloom and doom, and I know it sounds like that. We definitely need to recognize the challenges we're going to face. To give you something on the lighter side for millennials, again, with the perception. This was in a recent article I read about Lucy. Lucy is a millennial. She's entering the workforce, and Lucy has perception regarding instant success in a short period of time. It's green grass, flying unicorns, throwing up rainbows all along the way. Now, it's kind of funny when you look at this and you think about this younger generation and their perception of instant gratification and success, but how does that relate to housing, and how does that relate to you as a real estate agent? Well, thanks to shows like MTV Cribs, this generation has a much higher expectation of what their first home will be versus the actual reality. So you're going to run into this perception when working with this younger generation. So again, be prepared to bring them back down to the reality, have them work with a loan professional, but also have them understand some of the great products and programs that are available. And with that said, I'm actually going to turn it over to my dear friend, David Ritchie, who's going to talk about renovation programs and how these renovation programs can have them help these younger buyers and all borrowers really turn that home that they like into a home that they love. So with that, I'll turn it over to David.
Thanks, Deric. My name is David Ritchie. I'm VP of Business Development for Renovation and our one-time close products. There's 3 of me in the company, and we are excited to have this opportunity to speak to the members of ActiveRain and kind of help them see some opportunities that can help them not only grow their knowledge and expertise in the business, but really help their buyers move forward to owners. One of the things, and I have to thank Bob for his intro, because it really is what I wanted to talk about, is right now there are a lot of agents out there that just don't really have a knowledge base on the renovation space and what it can do for you. And that buyer that Bob is right now is the one that we're trying to help you introduce this to. And as Deric mentioned, even the first-time home buyer, this is a great product and a great way of showing them additional housing in the marketplace that maybe wasn't their first thought, but a way that they can ultimately get to their dream and their goal. Okay? So what I always like to say is, what we're going to talk about is vision, helping the buyer see the potential. And what I would also say is, a lot of times what we do is we're showing them a house, but our job is to help them see the home that it can be. So why is renovation lending starting to really take off and grow? And And I've identified a couple of things. One, our research shows that 1 in 4 properties are in some shape, form, or fashion of need of remodeling, updating, whether it's paint, whether it's carpeting, whether it's an additional room, whether it's a new roof. 1 in 4 properties. Now, not every one of the properties that you're marketing right now or your buyers are looking at are going to fall into required repairs. They may be something that's optional, and it may be taking that perfect scenario of location and making it the perfect home. Compounded with that, right now in many of the markets across the country, we have limited inventory for you guys to sell. And so if you have 1 in 4 of every properties that's in need of some shape, form, or fashion of updating or remodeling, you have limited inventory. It really leads to what Deric just references, a whole lot of properties that fall into the I like it but don't love it scenario. So a typical scenario that you may fall in when you're walking and you're showing properties, right? So you get a call from a potential buyer, and you ask them, well, where are you looking? What are you looking for? What's the amenities? And you identify all those, and then you send them a bunch of MLL listings with pictures and descriptions and everything else, and then you kind of prioritize them, and you say, this is the one that I want to go to first. And you think, okay, that's probably the most likely property that they're going to really want to buy. And then they walk in, and as they're walking around, suddenly and magically that wonderful piece of paper comes out of one of the buyer's hands, and they start writing a bunch of notes. And what's that note? That note's all the things that are holding them back on that property. And that's where we really come in, is because we want to capture that concept up front when you're first starting to show properties, and saying, hey, listen, just because you see something that maybe not be perfect for you, we have a potential solution to make it perfect for you. And then when they do that, they're starting to think beyond where they are. And our goal here is to show you an avenue to possibly show less houses to your potential buyers, so you're closing quicker and getting and moving that person into their property faster, and then you're talking to more and more potential buyers. So our renovation programs are really what help you do that. And one of the things that's important to understand is, what is a renovation loan? A renovation loan is where a home buyer finances the purchase price plus the cost of repairs with one loan application, one approval process, one closing, and one mortgage payment. And the repairs are done after the closing. And that's important because that means we still close on time. And yes, we still close on time. And you get paid at the closing, right? So in your world, not much has changed other than changing a little bit of how you're showing a property, getting them to envision the potential of what it can be. So you may have been showing a property where they might have a slightly outdated kitchen, and but the look and the feel is of the house, the location, and everything is exactly what you're looking for. So, or the buyer is looking for. So what we have to do is help them see what the potential is of that property, and maybe what new flooring, maybe new countertops, what a new cabinets might make that property look like. Okay. Or you have, like where I come from, every basement that looks just like this, and everybody's dream is to make their man cave or make it a second living area, just a place that they can truly utilize it. And again, our job is to help them see what the potential of having new cabinets, maybe having that larger screen TV, maybe new paneling, et cetera, on that property. So again, it's really helping them envision what the potential of that property and what that maybe that room or maybe multiple rooms could be, and how they can add the livability factor to the property. Or you might have a property that they still haven't gotten out of the 70s, right? And so they have the wood panel cabinetry, the yellow, not sure if that's yellow anymore, countertops, but it might have been yellow at one time, and wallpaper that we don't use anymore, and everything else. And getting them to say, hey, I can get beyond what this looks like if I can see what the potential of it could be, and making it more modern, and putting in maybe different lighting and different flooring, and opening up a window. All these things can be done with a renovation loan with prime lending. So again, what can be done? We can replace a roof. We can upgrade electrical. We can do mold remediation. We can do foundation repair. We can do just about anything you can think about doing to a property with one of our products, including adding a room, adding square footage out or up. Those are the required repairs. And then as you said, on the optional repairs, we can update a kitchen. We can paint, we can do siding, we can do solar for our good friends out in the California market that are doing a lot of solar right now and energy efficiency improvement, and even on some cases we can do landscaping, add a pool. So again, just because they come out of that property with a laundry list of items that didn't actually meet what they thought they were going to see, don't let them think that it can't materialize. And again, one of the key differences is when we do a renovation loan, we're taking the purchase price plus the cost of improvements, and that's what we're basing our loan amounts on. So it's all captured as in one. So we're really enhancing, and then instead of them going out and looking at taking additional cash out of their pockets. And as Deric mentioned, for that first-time homebuyer who doesn't have a lot of cash, right? This is a true opportunity for us. I'll tell you a story before we move on. This is when my wife and I were buying our second home. We were looking at two properties. My wife was what I always call a realtor's dream. She zeroed in on the street that she wanted to be on, and there were two houses on that street, and they were both the same model. Just one was in a little bit better condition than the other. And we looked at the first one, which was, it was a little dated, but there was nothing that needed to be done, but the price was about $35,000 more. And it was a little bit outside of our budget, and so, or maybe I was just being cheap and I didn't want to spend any more on it. But so we went and we looked at the other property, and the first time we looked at it, we said, boy, we couldn't get past that. It needed new carpet, it needed everything new. Let's just put it that way. The kitchen had to be remodeled, everything. And so we went back and we started negotiating a little bit on the property that didn't need as much work. And they just wouldn't get to the number that we were comfortable with. So I said, let's go back and look at that other property. Well, that's the time my wife actually went in, and all of a sudden that magical pad of paper comes out, and she's writing all this stuff down. And I'm thinking at the same time, when we get out of that property, yeah, some paint, maybe some carpet, I can get in, out, maybe $15,000, $20,000 additional. I'm saving that much in the purchase price. I'm good. My wife comes out with about a $45,000 laundry list. At this time, I didn't know about renovation loans. So I didn't have the opportunity to go to a loan officer and say, or did my loan officer at the time know about renovation loans? So I didn't have the opportunity for somebody to tell me there's a way to do this and not have to have all that extra money come out of pocket. And that's really the key here, because we all know I was going to make sure my wife got the house that she wanted, and she was going to be happy, so that would become the home she wanted to stay in for a long period of time. So, yep, I did what everybody does, and I put my money down, and then slowly but surely, she says, remember all those repairs we were going to do? I want them now. So then the next thing I'm doing is I'm laying out a bunch of cash for home improvements and remodeling and everything else. So, again, remember, we can tie it all together to one. And especially if you're dealing with somebody that doesn't have as much liquid cash to bring to closing, this might truly be an option for them. By the way, she wants to move again, and I told her no. Most of the lenders out there that offer a renovation program offer maybe 3 or 4 products. They offer the home style, maybe they offer the home path renovation, and they also offer the 203K full or streamline. What separates Prime Lending from our competition is we actually have 12 renovation programs. So our loan officers who are certified to promote this, but they can offer all of our products. So when they're sitting down and they're talking to your buyer, they're looking at a product opportunity to make sure it fits the need and is the solution for your buyer, and they're not giving them more loan than they need, right? But they're going to show them the opportunities. So yes, we offer the home style, the 203Ks, and the home path renovation products, but we also offer some other unique products like a swimming pool escrow, where You may have a buyer that's looking at a lot, property, and they love everything about it, but just doesn't have that pool and backyard kitchen outdoor kitchen they were looking for. Well, we have a product that can go on top of a conventional loan where they can go up to 35% of the improved value or $85,000 to add a pool and an outdoor kitchen. We also have another product, our jumbo product. So this isn't just for your conventional and your FHA size loans. We also have a jumbo loan that we can do virtually anything with, up to $1.5 million loan amount, $250,000 worth of renovation and repairs. So it really brings in that buyer that, they're looking at it, they're already looking at an upper scale property, they're probably going to want to change something. The question is, do they want to use their money or do they want to use the bank's money? And in that scenario, our jumbo renovation loan is just an awesome fit. And then one of our other products that I really want to highlight is our buyer and seller funded repair renovation product. And the reason I think this is such a huge opportunity, and a lot of our competitors don't have this, is because when you go out and you're having that loan, the loan's going through its process, and they have the inspection done, and then maybe that inspection comes back and they say the roof needs to be repaired. But your seller doesn't have the money to do the repairs right then and there. Well, our seller-funded escrow, they can fund that escrow account out of the proceeds of the sale and then have the work done after the closing. So again, the buyer gets into their property, the buyer gets the repairs they want done, right? The seller doesn't have to find a way to get money out or borrow money to do a repair on a property they're selling when they know they're going to have the money, and everybody is happy. And so to me, this is one of the unique products that we have that, if you remember, if you go back in this industry as long as I do, you probably remember when title companies would just say, oh yeah, we'll hold X number of grand in escrow for you. Well, they don't want to do that anymore. So what Prime did is they really created the buyer-seller funded escrow, and it's one that when later on I'm going to show you how you can find a local branch and local loan officer. Definitely talk to them about that, because it's a unique opportunity to really show you how that you can sell more properties and get those closings done faster. And again, all of our products are awesome, and they're sized and scaled depending on what the needs of that buyer is and will be.
Deric, I bet David, I bet every single person on this call has come into a scenario where the inspection brought something back that the sellers just couldn't afford, and it crashed the deal, right? They couldn't afford to come up and fix the roof before the close. I mean, this happens every day.
Right.
It's good stuff.
You're absolutely right, and that's why working with a prime lending loan officer that's able to offer, not only our traditional products, but also these 12 renovation products really adds value as a partner. And our goal is, if we can make your buyer happy, we know that we'll be your referral partner, and we want that, and we want to show you guys as agents how strong this program can really help you in increasing your sales. And it's not just for the property that is really damaged. It's for all properties, as Deric alluded to. This can, any buyer will take advantage of it, because as we all know, they all come out with that laundry list. It's just whether they're paying for it out of pocket or they're building it into a transaction. This next slide
on this slide, David, on this slide right here, because there's been a bunch of questions that have been coming in about stuff like, wait, how many bids can they get? Do they have time to get the bids? So we're going to drill in on that right here.
Right. So I've highlighted about four bullet points here. This is really the difference factor between, for you and your buyer, what is the difference between a renovation loan versus a traditional one, because we always have to get pre-qualified. You have to go find a house, right? Negotiate the contract. Now, here's where the issues come up, right? Or the differences come up. So now your buyer said, yep, I want to put an offer in on this property, but I want to ideally do the renovations right away after the closing. So they have to find a contractor that can do that work, right? So I would always tell you, and depending on the market, just as if you were ordering a home inspection period, and that's usually when we get the home inspection back, that's usually when we order the appraisal. So I want you to keep in mind, if you can get a contractor out there and give you a detailed bid, we're probably in that same time frame that it takes you to get an inspection done, we would be ordering the appraisal at the exact same time if you do it that way. One of the challenges that we have is the buyer takes their time in getting a contractor. We only need one bid. Now, that doesn't mean that your buyer should go out and not get multiple bids to make sure they are getting the best price, the best quality workmanship, and check references. But we only need one bid, and as long as that bid is the detailed bid, and and it's again, it's on target and it's the one you're going to move with, that's what we need. The buyer really should use that period of time that they're getting the inspection, and ideally, I'll tell you, the best bids come when the inspector and the contractor there are at the same time, because if the inspector finds something going on, right, and they're saying, hey, we might want to address this, the contractor's already in the loop, and they can already put that in the bid right then and there, and that keeps the process moving quickly. Now, if the bid comes in a little later, that's okay, because we're going to order the appraisal. We're already going down the path of the credit approval and all that stuff, so we're really just waiting for this property piece to come into play, right? Now, if you're doing a 203K full, you're going to have to get what's called a HUD consultant, and I'm not going to spend a lot of time into that. When you connect with one of our prime lending loan officers, they can go in much more detail on that for you. But really what the HUD consultant's main purpose is to do the same thing an inspector does, plus add the required repairs for FHA and any additional optional repairs that the buyer wants to do. And they put that together into a work write-up, and they work hand in glove with the contractor, and they get that put together, and that's what we work with in ordering the appraisal. Because remember, when we order the appraisal, we order it with the sales contract and the bid, so you get the future value. And that future value that we'll use will either be the purchase price plus the cost of improvements or the appraised value, whichever is less, okay? Then from there, it's really a matter of just moving the file forward. So there's not a lot of steps that slow the process down. Bob, your question is, I only need one contractor's bid unless they're going to use multiple contractors. And we will always suggest that they use a GC. It streamlines the process for them. But if they're going to get multiple contractors, they just have to realize they got to get them out sooner rather than later, get a detailed bid, get that to us, and we move that forward. We close these on time every day. It's not a process that doesn't happen as quickly as a traditional purchase. The only time it doesn't is if we don't get bids.
So Harold asked, and there's been a couple of other people that have asked a similar question. You said it runs on the same time frame. What is that?
We close.
Is this like a 90-day close or something like that?
We close these, and I would say I'd ask your buyer. Well, I ask our loan officers to suggest a 45-day lock all the time, just in case. Okay. But we close these in 30 days, and less sometimes, just like any other transaction that you're working on. One of the things that Prime Lending has done that is unique to this product, and with full disclosure, I used to work for another company and do the exact same product and everything else. And when you said 90 days, that used to be my best closing date, right? What we've done is we've found a way within our process to streamline it so that our processing and our fulfillment and our underwriting is getting done just like normal, right? So just like normal. The big difference is getting the contractor bids to get the appraisal. So we get the one part of the approval process already through, and then we're just waiting to piece it all together, right? And that's bringing the property piece in. So we don't look to close now in any less than 45 or any more than 45 days. Does it happen? Sure. But I'm going to tell you, usually it's buyer driven, and that's not a criticism. It's just what it is. So our closing times are no different than any one of our other transactions.
Awesome.
Okay. Any other questions on that side, Bob?
I mean, there's a lot of questions here, so we're going to get to all your guys' questions here once once David gets through these last couple slides here.
Almost done. So again, who's involved? The real estate agent, obviously, you guys are the most important because you drive the process from, the buyer after the buyer gets in touch with you. Your loan officer, very important. Your contractor, your appraisal. There may be a appraiser, a HUD consultant, or a feasibility inspector, and those are specific to certain products and certain things we're doing. And then our draw department. And again, remember, our draw department comes involved after the loan is closed, after you've been paid, and after that buyer is moved into that property, because that's when the work starts. Since
you mentioned when you get paid, there's been a couple of questions about this. The loan ends up being like the loan amount on the home plus the renovation cost. How does the agent get paid on all of that as a percentage?
No, I wish they could. They get paid just like normal on the sales contract, right? They negotiate the sales price, and that's how they get paid, right? We're building the transaction based on the purchase price, and then in our loan amount, we're adding that other stuff. So when they're doing their sales contract, they base their sales contract based on what they know, and that's the negotiated sales price.
Got it. Okay.
Good question. So again, one of the things we wanted to talk about today, kind of transitioning out of the renovation space, is, Bob, when you first started and you asked about the experience that some of the people on the call have had from a communication perspective, one of the things we're very proud of at Prime Lending is we've created a mobile app. And so it's something that can be used right now on an iPhone. It will be introduced to our Androids very soon. But this is basically, when you're working with a Prime Lending loan officer, you can go out right now and you can access the app on, at the App Store, but you need a Prime Lending loan officer to get you set up. But it'll give you the ability to monitor your pipeline, get updates on your pipeline, communicate with your loan officer, get messages and updates on product. It's pretty darn slick, if I can use that word. And and we also have a consumer app, which is becoming, and it's going to be very robust when it's ultimately fully introduced. But it's going to provide both you and your borrower ultimately status updates on where the loan is, when does it go into certain phases of the process. So again, instead of waiting for that weekly pipeline call that you may have with your loan officer, imagine the power of having that pipeline call without having a call, and you just have the pipeline. And you can search on it by, a number of different things, by property address, by borrower's name, you name it. Really kind of a really neat differentiator with us. We believe we're the first that has really introduced it. We're constantly making enhancements to it. So it's something that's really neat that we offer you from a standpoint of communication. And like I said, you can go right to your loan officer, email them questions, or call them right from that app. And so with that, we again want to thank you for your time. For those of you that are already partnering us, your business, and for those of you that will partner with us starting today, your future business, your relationship with us is of the most value. One of the things I want to point out to you is if you go to primelending.com, you can, in the right side, the left side of the screen, you'll have a Find a Branch locator. You can drill down on that by state, and then you'll see pop up every one of our branches in that state, and then you can click on the one closest to you, and then in the middle of the branch website, you'll have a locate a loan officer, and you click on that, and it'll pull up every one of our loan officers, and every one of them has the empowerment to talk to you not about just about our traditional products, but our renovation products. Also want to just put a quick plug in that we've just introduced our one-time close program, which not everybody is able to do, but if you have questions on that or any questions on the content of this presentation or questions that we may not have time to address today, you can email me. My email is on the bottom of this screen. So with that, Bob, I'm going to hand it back to you.
Okay, wow. So that's good stuff, and there's a lot of questions in here. So a couple of you guys asked real specific questions. To, like one person said, "Are you guys national?"
Yes.
All 50 states.
All 50 states.
Yeah. So all 50 states. Okay. So then there was some questions specific to like, do you have someone in Jacksonville? So they had showed you guys how you can go in here and find the locations. Man, while David was wrapping that up, my internet started kind of acting up a little bit. I'll try to make myself the presenter here real quick. And what I'd like to, yeah, here we go. Okay, I'm going to show you guys there. So they were talking about it, and this is not, you're going to see my screen here in a second. Hopefully, because again, my internet seems to be working a little bit funky. But okay, so we're on PrimeLending.com, and it's not their site. It's my internet that's loading this thing a little bit slow. But locations up here, I think, is what David was saying for where you can go. David, you can see that on my screen right now. Is that right?
Right, and then also if you just go a little bit to the lower and to the left, you'll see a Find a Branch Close to You also tab, and you can drop down by state.
Okay, so you guys can dive in right there and kind of find who's in your local area, and a bunch of you guys are asking like, can I get some resources? I'm interested in this additionally. I think David, you were is it D Ricci? Yeah. So here's David's email address, D Ricci right there at PrimeLending.com. He had it up on the screen before, but that's where you guys can, if you guys want to get additional information. Here's what I want to do before we answer a couple more of these questions, because I see some folks dropping off the line. I have never seen this product before, and I've been in the market, right? And so the fact that I'm in the market and the fact that I'm on ActiveRain every single day reading blog posts, and I've never come across this, is a little bit concerning to me. So what I'd like to offer to you guys that are on the call here today, let's make a little challenge to you guys. If you want to write a blog post about this type of a product, okay, I'll offer you some points for it, right? I'll give you 1,500 points, ActiveRain points. They don't mean a whole lot, right? But I give you these points to get you to do things you probably should be doing anyways. And so the thing you probably should be doing anyways is write something about this. Write a blog post. Share it with your sphere. Maybe you've got some buyers out there that are on the fence, and you know they've been looking at homes in their price range, but none of those homes are just quite right. Right? Now you've got a blog post that you can share with them because you've learned something today, and I'll give you some points for doing it. The edification for me is that, yeah.
I was going to just tell you, one of the things I'll do is I'll send you, and you can send out to all your ActiveRain membership, I'm going to send you a consumer guide that walks kind of through almost everything I just talked about. So
okay.
I think it's 18 pages. It'll have my contact information, so if they have questions, and I can link them to a loan officer in their market. But if they have a potential buyer that they want help in explaining this concept to them, all they got to do is show them this guide, and it'll walk them through exactly what we talked about.
Okay, so once you guys write the post, email me at bob@activerain.com. I'll give you your points. A couple of questions. Do you guys do wholesale lending? I think there was a loan officer on here who was really interested in some of these programs, and he asked, do you guys do wholesale, or is it just retail?
Unfortunately, no. We're a 100% retail shop. We're owned by a bank, so you have the financial strength and sound of being owned by a bank. But yeah, we're unfortunately just 100% retail, but we'd be more than happy to talk to them about switching to the dark side.
Okay, give me a sense for, because a lot of the folks, and real early in the call, there was a lot of people saying, is this an FHA 203K type mortgages? And then you kind of went in and said, well, that's one of a number of the products in there. Give some of the people on the call a sense for like the difference between why someone would go with 203K versus like one of the other types of loans that you have out there.
So sure, this is Deric. When we were developing our renovation platform, we felt that there was a serious need to have, the traditional renovation programs that address some of the larger renovation requirements, right? So that's usually where you see your 203Ks, whether it's a full or streamline, or the home style come into play for large renovation. But what we're coming across a lot of times is, as David mentioned, the home gets inspected and there's this small repair that needs to be done. It's $5,000, it's $4,000, it's a missing AC unit or water heater. So we wanted to develop and create a streamlined renovation program. And the reason we wanted to do that is because we knew we could gain a lot of traction with it. We knew that it would, definitely support our real estate agents, who again is one of our most valuable customers. but it also saves the borrower time and money. You know, the traditional cost of doing a traditional renovation program like a 203K or a home style is a lot higher than a regular conventional conforming loan. So we wanted to fill that gap and meet the need of these smaller renovation programs without having our consumer and our real estate agents be put through the ringer of all the required steps and paperwork. So that's why we kind of came up with these streamlined renovation programs, the buyer-seller funded escrow, the pool escrow, the jumbo renovation. You know, we wanted to address those different needs, and that's really the reason we offer such a robust product offering in this renovation space, is because we want to be a major player in that space, and we feel that's the space we need to be in.
Okay. Sorry, there's just a lot of really good questions in here. Do the contractors don't need to be pre-authorized, do they, or is there some? I mean, they can just go out and find a contractor that they're comfortable with. Is that right?
Yeah. Okay. So great question. What we do is we register the contractor. Okay. We don't approve them. The buyer goes out, selects their contractor. There is some paperwork that they need to complete, and then we get a contractor profile. And part of that registration process is we are doing a little background. We're doing a little bit of a integrity check. We don't ask for financials. We don't go down that path, but we do make sure that the contractor is one that we don't see potential risk for the buyer, because when after the close is when really everything starts, and we don't want that part of the experience to be uncomfortable and or bad for our buyers, right? And our borrowers, your buyers. So we do register them. It takes less than 72 hours. It's done kind of behind the scenes, so it's not anything that slows the process up. If there is an issue with registering, we would know almost immediately after we get that paperwork. So again, if we've already gone through the process, and it's an interesting question that I'm just going to take a little further because it's a natural one. If something came back, but we already ordered the appraisal, right, and they had that bid, then we would ask the buyer to look for another contractor. And the first thing is we'd like them just to basically see if they'll honor that bid, and then we just have them change the template that it's on, so it's with that company's name and everything. But it really shouldn't slow the process down if there is an issue with a contractor in the registration process. It's very rare, to be honest with you. So, but the buyer is the one that controls the contractor.
Okay. Virginia, I hope you're laughing at me and not rolling your eyes. Virginia asked a really awesome question, and I said, I'm going to ask that one next. And then when I responded to her, the question disappeared, and within 5 seconds, I'd forgotten her question. Thankfully, she asked it again, and the question was, is this just something for owner-occupied properties, or do you guys have these types of programs available at an investor level?
Good question. The home style, which is a conventional product, is able to be used for investors. However, just as a caveat to that, it's a single unit property. Now, having said that, if they have like a 1 or 2 unit property that they're living in as a primary and and they're renting the other, that can be done as well. So. But if it's a straight investor, it would be on our home style product that we could do that.
Okay.
And again, our local loan officer can go in much more detail on that.
I got a couple of just like, okay. There was one other one up here. I'm sorry. There's got so many good questions, and where is it? There's a. Okay. Well, here we go. What do these things cost? Is it a cost associated with the renovation part? Does it just all get rolled up into the interest rate? Like, I guess the question: what is the cost? Is it part of the escrow? Is it an upfront fee? How does it work?
Good question. There's not an upfront fee, so let's take that part off the table. There are some fees that are specific to the renovation, which will be built into the renovation costs. Remember, when we do the calculation on what the loan amount will be and what we can work with as a value, it's the purchase price plus the total renovation cost right? And so part of those fees. So there's a not to get too granular on this, but we build in the inspections for the draws. We build in if there is a supplemental origination fee that we charge, and that really is the fee. But that's all rolled in and financed into the transaction. You know, interest rates, they vary by day, but I would say that you probably find your rate with all candor somewhere between an eighth and maybe a quarter more on some of the products. Others, it's you know, just something maybe in a discount that they would see. But it's for what you get out of the loan, the value is there because we're using a future value that does not exist at the time that we're making the loan decision. So there is that calculated risk that we have to price into the transaction. And then the fees really aren't fees that we absorb, that we keep. Most of them are for services that are being provided, i.e. title updates, inspections that have to be done, that can then ultimately gives us the authorization to release the draw money.
David has an interesting question, and it kind of spurred a thought in my head. You know, we've been looking at this from the perspective of we have the buyer, right? We're the real estate agent out there with the buyer. But I think if you have a property that you know is going to be a challenge to sell because of all of these issues that David's been talking about, it makes sense as the listing agent to know about these types of programs, right? I mean, you got people coming into the open house and they're saying, oh, you know, this flooring is so disgusting and old, and man, this kitchen needs to be remodeled, and I just don't think that we've got the money after closing to be able to do this. I mean, as a listing agent, to know about these programs is huge. David's question a little bit, he says, you know, there's some properties that don't sell just because the sellers they're not willing to do cleanup, and some of these properties have gotten into a state of disrepair where, you know, it's just, they're not very marketable. So how does a renovation loan help resolve that type of property where it's like, it's just a wreck? I mean, is that just a marketing, that the listing agent just needs to be good at marketing, that there's help for somebody that planning to buy this? Or what's your take on that, David?
Well, I think I need a little bit more understanding of what we're saying from a standpoint that they just need to be cleaned up. But, you know, if it's, you know, a quick paint, or, you know, quick, you know, flooring, or maybe some minor landscaping. These are all things that can be done in some of our products, right? Now, not every product allows for full-scale landscaping, right? But we do have products that allow for it. And if the buyer doesn't, again, remember that buyer and/or seller funded escrow. It really is an interesting one where, you know, these are things that are probably going to be on the negotiation table, and whether they're giving a concession into the sales price, which obviously the agents don't necessarily want, or if they can build in a seller-funded escrow, that's the better way of doing it. As well as, you know, you bring up a good thing about the listing agent. Sometimes a property does need a little bit of that work, and they can do these. And again, the improved value will come from it if they wanted to do a refinance first and then sell their property. But they have to understand that there's some additional cost to them as a seller to do that, right? So again, something that I would definitely work with the agent and a prime lending loan officer to really understand, does it make sense from a cost to value basis? But if it's what's going to make it move, one of the other suggestions I would make in that scenario is if you're as a listing agent and you know it needs this, and you know it needs, and you know your buyer's agents are coming back and saying, yeah, we looked at that property, but you know it needs this. They can't even get past that, and they don't want anything to do with that paying to do that. Well, if you're getting that kind of feedback, have a contractor that you guys know come in and say, hey, I can do all the flooring, you know, based on this for this dollar amount. If you're interested, call me. Right next to it, and put right next to it, you know, your prime lending loan officer's name who offers the product that can get that funded for them, right? So there's ways that you can market and help them do that. Remember the word we started with was vision. We got to help them see the home it can be, get beyond the current state that it is.
You guys, so as I think about like buying a house and it's kind of a stressful time, and then like adding this additional element of like finding a great contractor, right? Because not everybody knows a great contractor. Not even every real estate agent knows a great contractor. We hope you would, but Do you guys like if so? Let's say I'm in San Jose. I'm looking at a property around here. I get connected with my prime lending. Do they have like approved? You guys have lists of approved contractors that I would be able to say, hey, I'd like to get this. How does that work? I know there's like RESPA probably in there somewhere.
We don't. I would suggest if you're in a situation like that, there's organizations like Angie's List. There's a couple of new ones that are coming out. You can also work with Home Depot and Lowe's, and there's a little back-end difference on how we work with them, but nothing that you have to be concerned about. For example, like at Home Depot, you would go to their Pro Desk, get a contractor. They'll come out. The Pro Desk will set up the bid. They'll coordinate the contractor, and then in the background we do some work with them or Lowe's for that matter. So it depending on what they're looking at doing and what size and scale they're looking at, that might be a solution for them.
Okay, so we have 150,000 real estate agents and other related professionals every single month that are landing on ActiveRain. Most of them weren't here today, and I promise you guys, a ton of them don't know about this. So take advantage. I'm going to give you some points. I'd love to see you guys write some stuff about this. Like I said, I'm in the market right now. I'm coming across a ton of homes that are just like the word. I mean, this is a perfect product for my girlfriend and I. So, David, Deric, I really appreciate you guys being here today. Thanks a lot.
Thank you.
All right, everybody. Thanks for joining us. If you guys have any questions, there's David's email address on the screen right there. You can reach out to him. You can reach out and find a loan officer in your area who's close. Have a chat with them, and if you've got real specific questions, and we didn't get a chance to answer them all today, so find a loan officer in your area. Call them up, quiz them. Ask them those things that are real specific to some scenarios that you guys might have in your business. Until next time, on behalf of David and Deric, who were here, and Keisha and Carrie, who are behind the scenes helping us keep this thing moving, my name is Bob Stewart at ActiveRain University. You guys have a fantastic weekend, and bye-bye, everybody.